Hi everyone, my name is benfox and I am the Vice President over here at Scarecrow Trading. I hope everybody's having a wonderful day. We are going to do a end of year update for 2023 on the Crow Chaser strategy. I did a video of this about 6 months earlier and I plan on doing biannual videos on the Crow Chaser strategy and our other strategy High Five as well. But today we're going to cover Crow Chaser. It's a 2x leverage NASDAQ 100 return strategy with downside protection. Now, I do want to iterate here that this is for professional use only. So if you're an advisor, this is for you to kind of give you an idea of how Crow Chaser works and operates. And we're going to go pretty deep dive here into Crow Chaser, so hopefully answer a lot of the questions you may have. Okay, so here is a little bit about Scarecrow Trading. We were founded in 2003 by our president, Leonard Fox. We are a family-owned and run business, and we consider ourselves to be equity specialists. We design strategies that use equities to outperform the S&P 500 with our various market elements that we have, and we're going to go over that in further slides. Here is a little bit more on Scarecrow Trading. The big thing here is everything that we do is 100% quantitative. It's 100% mechanical. We rerun our processes and reaffirm our position every single day. It may not change every single day, but we do look at that position to see if there are changes every single day. So how are we different? I think the biggest area where we are different is we believe in active portfolio management. We have strategies, some going back almost 20 years now, that have performed well in both bull and bear markets. We're going to talk about Crow Chaser, and we're going to see how it's performed in both of those type of market environments. Here is a quick description of the Crow Chaser strategy. I'm not going to take too much time on this slide because we're going to dive into it very in depth in the coming slides. These are the building blocks of the Crow Chaser strategy. Crow Chaser has 17 algorithms that look at 4 different market disciplines. Momentum, 25%, trend following is 35%, sentiment, 15%, and seasonal timing, 25%. This is a fun slide. Now we're going to talk about how the Crow Chaser strategy is generated. So we're going to start there on the bottom with level 1. We got the 17 algorithms, 8 in composite 1, 9 in composite 2. And I do want to say that there are some algorithms that are the same in composite 1 and are also in composite 2. I kind of explain these composites like beef stew, but they're 2 different recipes. If you're going to make beef stew, you're going to have beef. So there's going to be some beef components in both, but one stew recipe might have carrots and onions, the other one might have potatoes and celery and so on. So the blends are a little bit different. Now by those algorithms down there, you can see that they have a +1 or a +2, sometimes a -1 value. If they have a +1 value, that means that when they are turned on, they believe we're in a bull market. If they have a +2 value, they still, when they turn on, believe we're in a bull market, but they just were a better indicator at when we are being in a bull market, so we gave the algorithm more weighting. If they are a -1, they're actually better at predicting when we're in a bear market, so they provide a -1 weighting. Now we're going to go up to the top. Crow, composite 1 has a trigger value of 0. Composite 2 has a trigger value of 2. So what you do is you add up all of the algorithms values below and then you bring them up to the second level. So let's say that you add up all the 1s and 2s and -1s and you get a 3 for both. Okay, so at this point, 3 is above a 0. So if it's above the trigger point, that's a long trigger. 3 is also above 2, so that's another long trigger. So if you go up to the top, long and long equals long. So 100%, we are now 100% long invested in the market. Now let's say they're both at a 2 now. So 2 is still above 0, so that's now triggering long as well. But 2 is now equal to the trigger point in composite 2. If it is equal to or below, it gives a short trigger. So now you have a long trigger and a short trigger. They are in disagreement, so we go 100% to cash. That happens about 20% of the time on average. But if now, let's take the case where they're both below their trigger point, so let's say they're at zeros. 0 is equal to 0 in trigger 1, so it gives a short trigger. 0 is below 2, so it's a short trigger as well. Now you're getting a short trigger and a short trigger. We're 100% short, or inverse in this case. We do buy a inverse mutual fund of the NASDAQ 100, 2x, when we do go inverse. And inverse is around 5% of the time. So that's how the Crow Chaser signal is generated. Here are some more statistics on the Crow Chaser strategy. These are taken from a company called Theta Research, and they are net of 2.5% fee. So do keep that in mind when you're looking at this data here, that it is net of 2.5%. Now, a couple of things here. The number of trades, average trades per year for Crow Chaser is 11. So just under one per month on average. Now, I will say in the Crow Chaser strategy, a lot of times you'll see those trades happen in bunches. So you might not see a trade for 3 to 4 months, but then you might see 3 to 4 trades within a 1 month period. And that's because of the trigger values. If you think of it, if it's right around that trigger point, the chance for making a trade is a lot more often than if it's way above the trigger point where it needs a lot of those algorithms to turn off. Another thing here is the average percentage gain per winning trade. It's 11.37%. The average loss per losing trade is minus 6.16%. We also average 7 winning trades per year. So 7 out of those 11 are winning trades, which means 4 out of those 11 would be on average losing trades. So we have more winning trades on average and gain more during those winning trades, and have less losing trades on average and lose less during those losing trades. Now, overall, we believe that the Crow Chaser strategy provides 2 advantages. 1, better risk-adjusted returns, and 2, bear market protection. We're going to go through both of those in the next part of this presentation. And here we have some charts on Crow Chaser. You can see Crow Chaser here versus the S&P 500 total return over different periods, 3 months, 1 year, 3 years, 5 years. You can see Crow Chaser is the blue line there, and it's consistently outperforming the S&P 500 total return over each of those given periods there. Here is another chart on the Crow Chaser strategy, just showing different annualized periods versus the S&P 500. A big one there that we'd like to point out is the end of year number for Crow Chaser was 101.59%. That was actually Crow Chaser's best year. So we were very proud of that. It helped out a lot with the tech boom that we had last year within the NASDAQ products. But there it is, Crow Chaser versus the S&P 500 over different periods. This is a great slide to pause the presentation because there's a lot of data points here. You can see the monthly performance of Crow Chaser since inception. And you can also see the end of year number for Crow Chaser versus the S&P 500. So if you have specific years that you want to look at, how did Crow Chaser perform in this kind of market versus the S&P 500? You also see it's updated through the end of year last year with our best year that we had at 101.59% versus the S&P 500 total return, which had 26.27%. This is always a fun slide to look at. It's the value of $1 invested in Crow Chaser versus the value of $1 invested in the S&P 500 total return since Crow Chaser inception. You can just look at the chart and see that there is a big difference if you were in Crow Chaser back when we started this versus just buy and hold in an S&P 500 total return fund. This is another slide from Theta Research. So it is net of 2.5%, so just keep that in mind. A couple of data points here. Annualized performance, 23.29% versus the S&P 500 total return over the same period, which is just 9.78%. Maximum drawdown monthly for Crow Chaser during this the inception of Crow Chaser has been minus 41.94%. S&P 500 total return over that same period, minus 50.95%. So a little interesting there that our monthly number max drawdown was less than the S&P 500 total return since the inception of Crow Chaser. There are some other data points here, but I like to look at the bottom here with the capture ratio on the upside and the downside. So this is versus the S&P 500 total return. We capture 175% of the upside and 124% on the downside. Now, both of these numbers, I will say, are a little bit higher than what we generally see. And big part of that is probably because Crow Chaser was in the market a lot last year. Generally, we see this around 165 on the upside and then 118 or so on the downside. But since it was taking all of the upside of the market and all of the downside of the market for most of last year, it does make sense that both of those numbers are a little bit higher. This next slide allows us to kind of switch gears and look on the risk protection side of the Crow Chaser strategy. So this slide looks at the S&P 500 2X fund, RYTNX from Guggenheim, versus the Crow Chaser strategy. So if you were just buy and hold in this leverage fund, what the performance would be at the end of the year. If you look here, the maximum drawdown numbers are very different. The maximum drawdown numbers for the S&P 500 2X fund, minus 81.71%. Crow Chaser's almost half of that at minus 41.56%. If you look at the chart in the bottom right-hand corner, you will see that Crow Chaser is the blue there and the S&P 500 is the gray. You can see that there are a lot of bumps on the Crow Chaser strategies. Crow Chaser is going to take those drawdowns. There's going to be times where Crow Chaser is in the market and it's going to go down 2x what the market is doing. However, where we do see it providing a lot of that protection is the length of those drawdowns. I mean, look at the drawdown back there in 2008 for the S&P 500 2X. That was a long return until it got, or a long period before it got back to zero. I believe it was around 5.5 years. Crow Chaser took some drawdowns close to that 40% in there, but it snapped back out of those drawdowns a lot faster than it took for the S&P 500 buy and hold RYTNX to snap back. A similar story to the last slide, except this one is looking at RYVYX, which is more of a direct comparison to Crow Chaser here with a 2x NASDAQ 100 product. Maximum drawdown numbers are on there, and then you can see a kind of a similar story in that drawdown chart in the bottom right corner. This is another chart that I took from Theta Research, so it is net of that 2.5% fee. It's a rolling returns chart, and I like to pay attention to that percent of periods profitable number. We're looking at 3 months, it's at 68%. 6 months, it jumps up to 72. At 1 year, it's at 77. 2 year, 93. 3 year, 96. And then the 4 year, it's at 100%. Now, past performance does not predict future results. It is very nice, though, to see those numbers going up over time. We do look at Crow Chaser as a long-term aggressive strategy, and that kind of fits within this chart here where you can see it jumping from the 3-month period to the 4-year period and seeing those numbers going up. These next slides are going to just go over some different periods of Crow Chaser versus some bear market conditions, and you can just see how Crow Chaser made it or traded through those different market environments. So right now we're looking at a chart from Timer Track that's looking at the Great Recession. So it has Crow Chaser through the Great Recession period there versus the S&P 500. This slide is also looking at the Great Recession. It's looking at from the start of the decline for the S&P 500 until when it got back to zero. And you can see on the slide when the S&P 500 got back to zero, Crow Chaser was up 258% gross. In the next slide, I'm going to show what the S&P 500 was at when Crow Chaser got back to zero. So here's a slide when Crow Chaser got back to zero, and you can see when Crow Chaser is at zero, the S&P 500 is still down a little over 40%. So here's a comparison between the two. The S&P 500 recovery was 66 months. The Crow Chaser recovery during that period was 19 months. And by the time that the S&P 500 recovered, Crow Chaser was up around 258% gross. So that just shows an example of Crow Chaser navigating through one of the more volatile periods that we remember. Here's a little bit more recent example, the equity market drop in 2018. During that period, the S&P 500 total return was down around 18%. The 2X NASDAQ 100 index that we trade was down minus 43.56%, and our Crow Chaser strategy was down 15.91%. So that just shows a little bit of the protection that we have. If we were just buying and holding that mutual fund, we'd be down 43%. But in fact, with our trading during that period, we were down around where Crow Chaser was, 15 to 18%. This is another chart that we got from Timer Track. It just shows the Crow Chaser strategy versus the S&P 500 during that 2018 equity drop. And here's a continuation of that chart. When the S&P 500 got to zero, the Crow Chaser strategy was up around 26%. So kind of a similar story on a lighter level compared to what we had seen during the Great Recession. And then here we have another chart with a more recent memory here with the COVID-19 crisis. You can see that Crow Chaser in the beginning in the first quarter of the year was kind of around where the S&P 500 was. So it was kind of trading similar to it, but then it caught the snapback in the market and rose up to 98.2% gross during that year versus the S&P 500, which has ended the year around 18.4%. And we have another slide here from Timer Track showing the COVID era here. When the blue line for Crow Chaser is flat, that's when we're taking a cash position. So you can see some of the cash positions we had during that period. And then here's a continuation of that slide. When the S&P 500 got to zero, the Crow Chaser strategy was up around 28.5%. So another instance there where it shows the Crow Chaser strategy providing some of that bear market protection, but then using the 2x leverage fund to increase your returns as you recover out of that down market. And this chart shows the AUA of Crow Chaser throughout its history. You can see here that it's not updated through 2023. We are still waiting for a lot of those numbers to come in since it's just January in 2024 right now. But when I update this later this year, I will have that 2023 number in there. And we do expect it to be a lot higher because we had a 101.56% year last year. But if you're looking for that number, you can reach out to me probably in February or March, and I should have those numbers. If not, you will see that later on this year. And then here is the Gibbs letter and report for the Crow Chaser strategy. If you want to check it out in greater detail, it is available on our website at scarecrowtrading.com. Here are some bios on the president, Len Fox, and myself, Ben Fox, down there if you want to read those. And then lastly, we have everybody's favorite page, the disclosures page. I just want to reiterate that this presentation is for professional use only. So if you're an advisor, this is perfect for you to just get a better understanding about Crow Chaser. If you have any other questions, please feel free to reach out to me. My email was benfox@scarecrowtrading.com.